afternoon. Thanks for tuning in. You're watching us BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, and I'm Alex Matthew. Well, if you've got questions on equity, then you can send them to us on Twitter, Facebook, YouTube and WhatsApp. You can also call us on 022-454-04141 or you can mail us on askbq@bloombergquint.com. Just make sure to add the AskBQ hashtag.
All right, but before we get to the individual queries on the show, let's tell you what's happening with the markets. After record closing yesterday for Nifty Bank Nifty, there is about a profit booking that has kicked in the market today, but no major losses seen. Nifty is just about trading with cuts of about 13 to 14 points, still sitting above that mark of 11,900. Sensex down almost 41 points. Remember, this week can be a little bit volatile too because you've got the monthly contract expiring on Thursday. Nifty Bank Nifty, both for the May series, have seen gains of between 2 to 7% as we speak, and Bank Nifty right now is the one which has outperformed in the May series, so that's seeing more of cuts coming about, down almost 0.5%. The broader markets seem to be mixed today, no major losses coming about, but if you look at the advance decline ratio, last when I checked it was in favor of the advances, though the gap is now bridging a bit, but still it is very much in favor of the advances. In terms of Nifty contributors list, let's just pull up that and tell you which are the stocks which are capping the moves today on the upside. Are your heavyweights, for example HDFC, that's dragging the index lower by 14 points. L&T, which was trading around 52-week highs yesterday, seen some profit booking, and ICICI Bank, Kotak Mahindra Bank are the other counters. But support coming in from Reliance Industries, which was weak in the last 3 sessions, has bounced back today, and Infi TCS from the ID Bank are contributing. And Yes Bank is one of the top gainers on Nifty. The sectoral gainers are media and IT index. From the media pack, you've got Z, which is reacting to its numbers today, and Dish TV also trading in the positive territory. And IT, as I already mentioned, your constituents like Infi, TCS, and from the mid-cap space, Tata Elxsi is also doing pretty well. Let me highlight a couple of gainers from the broader markets, and a lot of result reactions or on back of news, the stocks are moving around. NHPC, the profits jumped almost 2.5 times. The counter is up 8%. Reliance Capital, they've divested their stake in Big FM to music broadcast for 1,050 crores, so 5% higher for that one. And Adani Gas, which came out with its numbers yesterday, has seen gains of about closer to 14%. On the losing side, 1% Beverages, second straight day of lower circuit for this one, 20% down. Shankara Building is down almost 4%. Max Financial comes up with its earnings today. That's down nearly 3%. And Divan Housing is the other one which has seen intraday losses coming about. I think it's recovered a bit from the day's low, but it's still sitting with cuts of about 3 to 3.5%. So net, Alex, things are still looking good. I think it's just a minor bout of profit booking that we are seeing. That's why no major moves have come about so far.
All right, well, that's how the markets look. Let's get our 2 experts in. Rather, they're already in. They're sitting right next to me in the studio. Samir Kalra of Target Investing and Aditya Agarwala of Yes Securities. They're here to answer all of your questions. I do want to take you very quickly through their picks. We've got Aditya's picks. There are 2 for you. Godrej Consumer Products is the first one. Buy at the current market price with a target of 705 to 720 and a stop loss of 655. The second one is Petronet LNG. Again, a buy call at the current market price. The target here is 265 to 275. The stop loss is 237. We've got Samir's pick, which is Indian Hotels, which is a 6-month pick. The target here is 185. We can pull up that chart just to see where it's currently trading, 151. The point that he's making is that there is low capacity addition and higher prices that you have to account for going forward over the next 6 months or so.
Okay, let's get going and start addressing viewer queries. Our first query comes in from, Salman Khan. He wants to know about KNR Construction. He's saying the results are due on May 30th, and he's got some holdings at about 277. He wants to know if he should hold or exit before the numbers come about. 288, and he's bought at 277. Aditya, he's in the money. What would you advise him?
Look to book profits around 300. Stock's been on a tear, backed by extremely healthy volumes. So those are healthy signs for me. 300 is my first target. So look to book profits around 300. If the stock manages to trade above 300, I'm looking at northward target of 330. So still, there is more upside left in the stock. My only recommendation is to hold on to it, put a trailing stop loss at 276 and look for first target of 300, 330.
Okay, let's talk about, in fact, one of the stocks that a lot of people have been asking about in the recent past in the auto space, Ashok Leyland. So Raveen is saying that he's been holding on for 9 months with virtually no returns. He's at 92. Stock is exactly there. Is it still a good prospect for the next 3 to 4 years, though?
I think it's good he doesn't have any losses.
Yeah.
So I think it's better to exit right now because I don't see any reversal. Even if the new government is coming, they might be, waiting for 2 to 3 months just to see how the impact on the other measures they're putting comes to the auto industry and if there is any reversal in that sense. And then take an extreme measure to revive it at some point of the time. It won't be the first step they take and then see a revival coming through. Because I think that it's a conservative government. They don't like to disturb the fiscal which they are running on. And they don't have the space beyond that as of now.
Then there's the disruption of the emission norms to take into account,
so
right?
I think even any revival before April 2020 will be at a higher cost. So I think it's better to sell on any kind of bumps you get rather than entering at any kind of places.
Okay.
Okay, that's a show clearly for you. Last 12 months, the stock seen cuts of about 37%. Ujjwal Kumar writes to us, Aditya, I'm going to come to you. He needs technical view on stocks like HDFC Life, LIC Housing Finance, and he wants to know what should be the target and stop loss for both these stocks.
So first, coming to HDFC Life, stock has broken out from the consolidation resistance of 415 and now it's headed towards levels of 445. So my first target out here will be 445, put a stop at 410. As far as LIC Housing Finance is concerned, that is yet to break out from its resistance of 550. That happens to be its immediate resistance. So I would want the stock to trade above 550. Then in that case, my target will be 490. I would put more weightage to HDFC Life as compared to LIC Housing Finance. So if it's making money, probably can look to book out profits from LIC and hold on to HDFC Life.
Okay, Shalom asked the same question yesterday. We didn't take it because of the paucity of time, but I'm going to address this on top. Yep. He's named a few sectors. Now, you don't have to go into the details of each of them if they stand out, and within them, if you can pick up one stock that you can recommend. The first one is road and construction. The second is real estate, specialty chemicals, rural-based consumption. For the next 5 years or so. So basically all sectors that would do well with a new government that's focused on growth, right?
So I think road and construction, if you go, I think it's better to play through cement stocks. And over there, if you see Ultratech or a Shree Cement, that will be better off rather than playing it directly because balance sheets are stretched over there. Second was real estate. If you pick a real estate, I see positiveness coming up in next couple of years, and Oberoi Realty is the best place to be because that's a cash-rich company. Third was
you don't necessarily have to go if you think specialty chemicals, rural-based consumption.
So the specialty will be a positive sense. If you go, Deepak Nitrate is one of the companies where he can look at, and rural-based, I think. Then you can see a Dabur if you want to, but I would avoid it right now.
Okay. Samir, I'm going back to the infra space, and this is one space which everybody has been talking about post. We've got Modi 2.0 coming back. So this is one space, I think, which was in focus in the first term as well, and not all the stocks have done well. So one of our viewers is saying, if somebody takes an exposure to these companies in the realty pack, because we're expecting some sort of execution coming by and order inflow also to pick up, how should one hedge themselves if they hold these stocks in their portfolio?
See, hedging themselves in this kind of a scenario can only come through defensive play. So either, because if that doesn't pick up, then there is a risk you're running towards cash flow moving to defensive. So either you can have a consumer name or a IT name in your portfolio to hedge the, kind of cyclical plays.
Okay. I believe Ankit Shukla is looking for a view on the charts, on the technicals of ITC. Let's pull it up and see what it's currently trading. It's currently flat, or as flat can be, at 290 in today's session. What is the near term looking like?
It fails to break out from that resistance of 310. It's made multiple attempts. Every time it moves towards 310, you get a sense that it will break out this time around, but it doesn't happen. So for me, it's doing nothing at all on the downside. 280 to about 285 is the immediate support.
1 month target?
I would say, because it's sitting at the lower end of the range, probably he can put a stop somewhere on 280 and look for a target of 300 and then 310.
Okay, that's ITC. 290 is the level where it's trading. Aditya, I'm going to come back to you. Sivakumar wants a short-term view for the next 1 month on stocks like Titan and Kajaria Ceramics.
So Titan, probably I believe there's more downside to it rather than upside, because the stock is trading at extremely overbought levels. So my immediate targets on the upside would be around capped to 1250. If somewhere around he gets those levels of 1250 to about 1260, he should look to book out profits. On the downside, I see probably stock testing first levels of 1150 to about 1100, then resume its upward movement. Kajaria, on the other hand, is showing more strength, so I would want to hold on to Kajaria Ceramics, put a stop somewhere around 620 and look for a target of 680 to about 700 on the upside.
Okay, let's get this out of the way. Maharashtra Scooter, Mayank Saraf has been holding on to this, I'm sure you remember, for a long time now. And he's so convinced with the stock he's been holding. And he says that it's going to be entering into the small cap index from tomorrow. Should he hold on? Should he keep adding?
That depends on the level if he has. If he's making real good money, then hold on to it. Don't add or anything, because there's no fundamental reason of
for
these kind of vibes. It's just only the land bank it has, and the High Court decision was in the favor of what the promoters wanted. So I think it's better to keep on to it. But if you see any reason to sell it, just sell it up.
Yeah, so keep a trailing stop loss, I would think, right?
Yeah, that can
64%. Perhaps on Maharashtra Scooters, consider keeping a...
Definitely, you should put a trailing stop loss somewhere around 4,000 to about 4,050. That's a good trailing stop loss, and the moment stock trades below that, he is out of the trade.
Okay, that's Maharashtra Scooters, up almost 4% in trade. Sameer, one of our viewers wants to know about Max Financial and also Muthoot Finance. Is it a good choice for monthly SIP for the next 2 years? And also he's asking, are they good portfolio stocks?
So Muthoot can be the place. Max, I would avoid doing a SIP. Instead, he can look at a SGFC Life or a SGFC for that matter. I think if he's wanting a NBFC exposure, SGFC is a better place to be. Because when you do SIP, the only trouble is there's a lot of corporate governance issues you have to look after. So that the next 5 years you're doing SIP, the company doesn't faces a lot of drags. So I think SGFC will be a better place to be doing a SIP, and Muthoot, he can do a SIP, but not Max.
Okay, coming back to you on this one, you've already mentioned about your pick in the real estate space. Oberoi Realty is your pick. We've got Jim Matthew, who's bought DLF around 150 levels. Stock is currently at 190 or thereabouts, closer to 200. He's asking if he should hold or should he book profits?
I think he should, technically he can be suggested, but otherwise I don't see any reason to sell out fundamentally, because the debt has reduced, the results have been better, the unsold inventory is reducing as well. So I don't see any major reason to sell out as of now. Otherwise, technically he can be helped.
There's a big bounce in the recent past.
And there is strength in the stock, no doubt about that. Probably he can look to book profit somewhere around 210. That is a decent profit. If it crosses 210, the next level of profit booking level would be around 230. So these are two levels, 210 and 230, where he can look to partially book profits.
Okay, let's move on. There are some short-term queries. So Aditya, I'm going to come to you. Akshay Mittal has written to us. He's making losses in 2 positions that he's taken. One of them is Radico Khaitan. Pull up that chart. I think his buying price is somewhere about 400 rupees in Radico, and now the stock's trading at about 345. The other one is Godrej Agrovet, which he's bought around 599, and here too the stock's below Akshay's buying price of 599. He wants to know if he should book losses or he should use these levels to average out his positions. What would your advice be to him?
So Radico Khaitan, definitely you should not look to average at current levels, because I see weakening chart patterns as far as Radico is concerned. On the downside, 340 is where I would suggest him to put a stop. If the stock trades below 340, he should be out of the trade, because in that case I see stock testing levels of 320 and 300 on the downside. So clear cut no as far as Radico Khaitan is concerned. Godrej Agrovet, on the other hand, probably stock has bounced back from levels of 460, and he can look to average at current levels of 514, because there's good volume in that bounce back. So I trust that volume back to bounce back, and place a stop somewhere around 495, and he should see his targets of his buying price of 480, 490 in probably 2 to 3 months.
Okay, I want to very quickly check with you, Aditya, the 2 counters that you gave, which was Godrej Consumer and Petronet LNG.
Right.
Are these views that you can look at for 2 weeks?
Probably more than 2 weeks. Probably he can hold on to it. Somebody can look for a month.
A month. Okay, fine.
Yep.
I want to come to you on the next one. Nilesh Maheshwari wants to know about Yes Bank. He's bought at levels of 140, which he wants to hold for a period of 2 years. Should he hold on? Alternatively, should he look at something like a Bank of Baroda?
So I think if you're looking to invest for 2 years, you have to spread the investment. If you have put a good chunk, I think take out some, and then you can reinvest if you see a further improvement on the quarterly results. Because I think that becomes a one big parameter right now for the performance on the continuing. And if you are looking for 2 years, I think a 10-15% kind of a loss will not impact you that much.
Okay, since we're talking about the banking stocks, Samir, Anil Salaria wants a view on RBL Bank from a longer term perspective, and this is a stock which has been outperforming. It's trading around its all-time high levels. What would you advise?
So I think, as you said, it's trading around all-time high levels. The valuations to enter doesn't justify the scenario as of now. The results have been supporting the valuation. It's not that. But the only point is right now, if you see, there's a lot of competition going into even the larger banks. So that can deteriorate your YOY growth and quarter on quarter. So any kind of slowdown on quarter on quarter basis for these banks with such a high valuation really dampens it out. So I think avoid it if you don't have. If you have it, just hold on to it.
All right, Vignesh, Aditya has already given you his picks for the short term. The next question to you is on Vodafone Idea. Divakar Satya is holding the stock. I don't know what level he's holding at, but the stock is currently just around that 13 mark. He's asking you as far to look as far as you can into the future and tell him what is the longest that you can look and where do you see it going?
The longer future I look at it, the more I see stock falling to sub 10 levels. So my only recommendation is to exit from the stock. I don't see any trend reversal yet. Till the time stock trades above 15, 16 or probably 18 is the resistance level from above which I would want the stock to trade. Otherwise it's an exit from my side.
Okay, that's Vodafone. I don't know if we've done technical check for ITC, Aditya, because a lot of queries are coming. Okay, it's done?
Yes, okay. Right on top of the show.
All right, so let's take our next query is on ABB. Gobind Vijay writes to us, and he's holding ABB from 1200 levels. He wants to know if he should book profit or hold. Yesterday, the stock was up and about. It was trading around its 52-week high levels. And remember, all of these stocks, L&T, ABB, Siemens, have been going up. Today is the day when you're seeing some bit of profit booking. So 1200 is his buy price, Samir. 1570, and this is the theme everyone's going to play for the next 5 years. Should he stay put or just book profits?
I think stay put, keep looking at the results because the only point is all the results which you took the name of L&T, ABB, Siemens, these all results are coming off better because last year they were facing a lot of issues on the order book execution part, which is reviving now for them. So I think keep the hold on quarterly results. If you see any kind of difference on that, then only exit. Otherwise, I think there's no point of exiting as of now.
Let's pull up IndusInd charts and let's perhaps look at the last 1 month or thereabouts, because the stock has been very active in the recent past. If I'm not mistaken, just after the results came in, there was a big bounce in the stock and it has come from levels of as low as 1358 all the way up to levels of nearly 1700. On the charts for the next 3 months, where do you see it going?
So it is still in that range of 1700 on the upside to about 1350, 1400 on the downside. It has come quite a bit from the lower end of the range, which was 1350 to about 1400, almost there towards the upper end of the range, which is 1700. So for me, risk to reward is not in favor of going long at the moment. Yes, if the stock crosses above 1700 and closes on a weekly basis, then the trend reverses for the stock. In that case, I would be a buyer in the stock and look for a target of as high as 2000 in a couple of months' time. But as of now, I would rather look not to buy at current levels. On declines to levels of 1500, I could look to buy the stock.
I see that 2023 is the all-time high.
Yes.
Yeah, in fact, the last 7 days return that we're seeing was purely on account of short covering. Post the numbers, the stock bounced back. But before that, it was an underperformer if you compare it among the Bank Nifty constituents. Let's move on and take our next query on Hudco. One of our viewers has written to us, Kunal. Okay, he's holding 3,000 shares of this, Aditya, at a price of 45.6. I think the stock touched levels of 38 to 39 just about around May 15th, and it's bounced back from those levels. Right now also it's trading with gains of 3%, just around at his buy price. What would you advise?
Hold on to it. I see good bounce back in the stock. It's formed a base somewhere around sub 40 levels, as you mentioned. Made a double top rather at 37.5. From there it's bounced back. Put a stop at 42.5 and look for a first first target of 48. If that is taken out on the upside, I look for a target of 52. So play for a target of 48 as of now and put a stop somewhere around 42 and a half.
A lot of short-term queries and another couple coming in from Rangarajan Balakrishnan. L&T and TVS Electronics. For the perspective of 3 months, L&T currently trading a little weak, about nearly 2% lower in trade today.
Sitting at extremely overbought levels as far as L&T is concerned. Stock has given a massive return from 1280 to about 1600 in like 2 weeks time. I would not look to buy at current levels. On declines to levels of 1500 or 1480 is my buying zone as far as L&T is concerned. Upside is capped at 1620, so risk to reward is definitely not in favor of going long at current levels as far as L&T is concerned.
The second one is TVS Electronics. Let's pull up the chart and see where it's currently trading. If we can, it's actually up 10% in trade, significant volume.
Volumes are also pretty high in trade today. So yes, there is some recovery in the stock, but again, it's just sitting at that resistance of 220. That is where the stock is trading at, and from there it has cooled off a little bit from after making a high of 220. So above 220, I would take a long trade, not at current levels, because I believe it can. It has opened with a gap up. It can cover that gap of 190 to about 220. So if it crosses 220, I'll be a buyer for targets of 280. If it doesn't manage to cross 220, I'm not buying today.
Okay, TVS Electronics up 10% in trade. Samir, if auto inflows are going to pick up in the next 5 years, the beneficiary of that would also be from the cement space, right? So Sharath wants to know what are the best fundamental picks in the cement pack and also in the engineering space. I also know you like Shree Cement, but that counter is already trading around its all-time high levels. Valuations are quite expensive. How should one play this space when this is emerging to be as a sunrise sector now for the next 5 years?
See, I'll still stick with Shree Cement and Ultratech, because what has happened in last year, the benefit of the results or whatever volume pickup you were seeing was on the base of new capacities being added to Shree Cement, and for Ultratech it was the JP acquisition. So that was helping both of them on the volume side. If you see, the pricing wasn't there last year. It was hardly a 2%, 3% kind of price hikes they got. This year, I believe it will be more on the pricing lever, because a lot of road construction which was being completed is almost through on the execution part of it. New roads will be more of extending lanings, so that is much more okay to be having a higher pricing of cement over there. So I think pricing will be come back in FY20, and if I see that as a sector, the only balance sheets which are supporting the system, because you're talking about next 5 years, so you have to see net worths, cash flows, balance sheets more importantly. So I think Shree Cement and Ultratech still stands out as compared to others.
And from the engineering space?
So engineering, I'll stick out with ABB as of now. Okay. Beyond that, I don't look into much.
Okay. Just to add to it, there's a lot of buying that we have witnessed in the small stocks, small cap or mid cap cement stocks. There's massive volume backed action. You can also take just to add a few more names. Dalmia Bharat, which recently got relisted, looking extremely attractive on the charts, somewhere around placed on 1200. I see easily about 100 to about 200 rupee upside from current levels. And the second stock you can also take a look at is Star Cement. That has also come off beautifully from the lows. It's broken out from a consolidation, long consolidation. So these are some of the stocks which are breaking out after long, about 2 year or 1 year consolidations. So these are some of the stocks which can actually give you more 20-30% easily on the upside.
Okay, well, I believe that the PNB numbers have just come out. They should be flashing at the bottom of your screen. The net loss number has come in at 4,750 crore rupees. The stock as of now is not reacting, but it could react in the near future. Let's just wait for a few more of those numbers to come in. Well, in the meanwhile, we can perhaps move to another question. Capacity infra projects is the question from Tapan Reddy. He's looking for a short-term view. He's already holding. He's bought in at 410, and he's asking if we should hold on for the short term.
He's bought it at 410. So he should hold on to it. I'm looking at a target of 320 on the upside from a shorter term time frame.
All right, I believe we have the PNB press conference that is ongoing. We'll cut in live to see what they're saying.
Other highlights, the business. As I've talked about, addition of 1 lakh crore in the business. The gross global business has crossed 11.8 crores. The CD ratio has improved to 67.79%, which is 99 basis point increase over December. And the customer base has increased by 45 lakh. This is a graphical representation of the business growth. There has been consistent growth in the business, both gross business as well as average gross business. Deposits. The domestic deposits have increased by 9%. The CASA share I talked about is 43.51%, which is 16 basis points over the December number. The savings deposit has increased by 8%, and the current deposits have increased by 9.9%. Graphical representation of the improving CASA share. We can see consistently there has been a constant increase in the savings and the current account. As a result, the CASA share is at 43.51% from 43.35% in December. Credit. Both on the liability side and the asset side, bank has achieved a healthy growth in both the numbers. On the credit side, we grew at 14.1%, systems growth higher than the systems growth. Retail credit grew at 21%, agriculture by 17.8%, and it's not just the growth in credit. There has been a consistent improvement in the quality of the advances also. The fresh sanctions during the year, 88% were rated A and above. So this is an increase in the credit. In March 17, we grew by 3.13%. In March 18, we grew by 9.84%. And in March 19, we have grown by 14.1%. The small ticket advances. My retail has grown by 21%, which has basically been driven by housing, which is a very safe, secure advance, where the growth has been 25.4%. We have also met all the national goals. My priority sector was at 41.9% as against the national target of 40%. Total agriculture advance was at 18.4% against the national goal of 18%. And the small and marginal farmers was 8.4% against the national goal of 8%. Many initiatives have been put in place to boost the growth of the RAM, retail asset and MSME advances. And some of the initiatives have been listed here. Under retail, we have started a centralized loan appraisal and processing system, CLAPS, which covers all retail loans. It helps in a smoother and it reduces the time, turnaround time, and also improves the quality of the asset being done. The new schemes have been, segmented new schemes have been introduced in loans, like a scheme has been introduced for the doctors, specific target. Under agriculture, the online mode of generation of business through RCTs and FTCs is being promoted. Portal and mobile app has been introduced for the agriculture officers. And lending automation processing system for objective assessment of agriculture proposals has been put in place. Under MSME, there is a contactless loan. PNB along with SIDBI and 4 other public sector banks invested in the PSB loans in 59 minutes platform to provide contactless loan to the MSME borrowers. The credit proposal tracking system, MSME applicants can e-track the status of the applications at the bank's corporate website. This is a big help to the borrower. He can track his application. Bank has also launched e-trade scheme for online discounting of trade receivables, and a portal has been developed for in-principle approval for the loan up to ₹1 lakh, which can be available at the bank's website. So basically, above 1 lakh crore we could do online on the PSB loans, and less for the smaller customers. Bank has also introduced a portal for the less than 1 lakh crore. And this increase in credit, as I mentioned earlier, is been consistent and complementing the rating or the quality of portfolio, which is exhibited here. If you see in March 17, the A rated and above accounts was 62.9%, which has increased by 25 to 87.9% in March 19, a big jump of 25%. And similar thing is reflected in the risk weight wise portfolio. Portfolio having less than 100% risk was 60% in March 17, and now it has increased to 75% in March 19, an increase of 15%. The credit quality is improving. At the same time, on both the fronts, fresh sanctions are improving, the quality of the fresh sanctions has improved, as well as there have been efforts and there has been tangible results in the recovery which has happened, which is leading to the improvement in overall asset quality. The gross recovery of the bank was more than 20,000 crores during the year. The net NPA ratio declined to 6.56% from 11.24% in March 18. The gross NPA ratio also reduced significantly to 15.5% from 18.38%. The provision coverage ratio of the bank is at a very healthy 74.5% in March 19, and for the NCLT accounts it stands at 85.2%. A graphical representation and along with the numbers, the gross NPA, the first graph talks about the gross NPA, which has come down from 86,620 to 78,473. The net NPAs have come down from 48,684 to 30,000 crores. The stressed asset has come down from 19.49% to 16.01%. And the provision, while all the other graphs have been coming down consistently, there is a constant increase in the provision coverage that is being provided on the accounts. The exposure of the NCLT accounts and the coverage, it is ranging from 80% to 94.5%, and on an average it is 85.2% for the total portfolio. The credit growth, if you see, there has been a consistent increase in the credit growth, but the slippages have been contained. In quarter 4, my slippage total was, this year was 5,000 odd crores compared to 30,000 crores which was slipped during the quarter 4 last year. Even on a full year basis, if we see, the slippages during the current year were restricted to 16,000 crores as against a total full year slippage of 40,600 crores last year. Improving credit quality, the risk rating. The risk-weighted assets of the bank reduced by 50,985 crores during the year. The domestic credit exposure simultaneously increased by 51,788 crores. The domestic credit risk-weighted assets declined by 24,782 crores. As a result, the risk-weighted density has substantially improved to 48.72% from 64.88% in March 17. The rating, as already mentioned, fresh sanctions with external ratings of A and above have increased by 8% to 87.89%. Capital optimization. This growth in credit, what we have been doing is largely driven by the capital optimization what we have done. 64.88 was my risk-weighted density in March 17, which has come down to 48.72%, a decline of more than 1,600 basis points. The risk, and if you see the increase in gross domestic credit in the second graph, we increased the gross domestic credit exposure increased to 5,86,127 from 5,34,339. But there has been a decline in the risk-weighted density from 3,10,390 to 2,85,608, which is a decline of 24,782 crores. Business segment performance. The gross domestic, we are giving gross domestic advances increased. If we see the growth number, they increased by 14.1%, as against a growth of 9.8% last year. The overseas advances have been it's a strategic decision to move out of the overseas. So the overseas advances have seen a degrowth of 62%,